they are suppressing the price down to make sure that while the miners have to upgrade, that they get a bad price so that they can keep buying the ETF at a good price. And I think at some point there will be a short squeeze and they will have to cover their shorts. So I think we're very close to probably experiencing some pretty massive gains.
So the Fed decided to hold the rate steady yesterday, and there's an anticipation that there will only be one rate cut this year. On the show, as always, joined by CryptoRookies. How's the response been from the market?
Overall, the market has crashed a little bit, and I'll share my screen, but it's not excessive. Prior to the FOMC meeting, based on the CPI data, the market went up quite a lot. And then during the meeting, the market realized that like just one rate cut was maybe not that great or something like that. So then we saw the price plunge basically. It's recovering a bit right now. We're above the 21-day moving average. I think we're in a good shape overall. We're still pretty high in the current range. Ideally, we would want to move up a bit further than that, but and reclaim the previous high. But I think it's not excessively bad. We are still in the bull trend. So
A lot
it's
of
looking
people
good.
say that whenever you have this long periods of consolidation, it creates a lot more of a volatile burst, so to speak. Are
Yes.
you under the same presumption?
Yeah, that's usually what happens. So I would expect the same. There's one thing that I've noticed, and I saw a few people on Twitter starting to discuss, and that's kind of interesting. It would appear there's some market manipulation going on, probably by the BlackRock and those type of organization. It's probably like a cluster of them, not just one entity. But if you see the buying volume of the ETF here around the 14th of March, we were at $12 billion of net inflow regarding the Bitcoin ETF. And when you look at the price, the 14th of March is here. And the price was basically around 71K. So that's the all-time high that we reached at that point. Right now, the price is below that point. And strangely enough, it was at $12 billion of net inflow. Now we're at 15 billion. So there's an extra 3.5 billion that went to the market, but the price is below. And everybody know that we're post-halving and the market is likely to experience some massive growth over the next while. So who's selling and where's the money going basically? Like from what people have calculated, the price should be around $94,000. And one thing that could explain that is that if you see on the CME, that's part of the Chicago Mercantile Exchange, people are opening a lot of shorts between March 14. A lot of people have put a lot of shorts, and it's increasing right now. But we know the market is not most likely going down. Like the inflow of the ETF are moving up quite nicely. So who in their right mind would be selling? Like if you're using shorts to short the market, you may be suppressing the price artificially. And why would you want to do that? Is because ever since the Bitcoin halving at this point in time, like that's the green vertical line here, the Bitcoin miners need to upgrade their equipment to stay competitive and have good financial statements. And that means that prior to that, they probably were selling some Bitcoin to finance the upgrade of their equipment. And that might have explained a bit of the price going down. But most likely the 3.5 billion is quite a lot of money. So most likely it was done OTC, selling from the miners, maybe directly to the BlackRock and to the ETF issuers. And maybe the selling pressure from the shorting with leverage to keep the price down is to make sure that those Bitcoin miners don't get a good price on their selling of the Bitcoin while they are upgrading their equipment. So most likely this is probably very close to complete. And it's most likely that it's not BlackRock that is shorting the market, because that would be market manipulation. But that doesn't mean they are not working out with partners that are hedge funds to do it So the thing, I really think it's they are suppressing the price down to make sure that while the miners have to upgrade, that they get a bad price so that they can keep buying the ETF at a good price. And I think at some point there will be a short squeeze and they will have to cover their shorts. And I think the time is probably running out. So I think it's we're very close to probably experiencing some pretty massive gains.
What would cause that squeeze to happen?
Because the thing is, if the price suddenly start to spike, those shorts will be getting liquidated. But most likely, those shorts, the people or the institutional, like the big entity that are open that, they probably just gonna cover. And saying if it turn out that it's the ETF that bought like the supply of Bitcoin from the miners, I think they probably can work out a deal OTC to loan the Bitcoin to the hedge fund that shorted the market so that they can cover their shorts. This way they don't get squeezed out. So we'll see what happens, but I have a feeling that there's some big market manipulation happening there with some, they're probably using some options that are relatively new in the crypto space also to cover their assets. But it looks like it's with $3.5 billion of net inflow, the price should be higher than what it was in March.
So
So
if you're a retail investor, Patrick, and you're looking at this information, I mean, are you feeling discouraged or the opposite? Like now is the time to accumulate because this can only last so long before
yeah,
the next leg up, right?
but the thing that's the if that's the game they are playing with real manipulation like this, and I think there's no way to really prove it. Um, if you open long with leverage, you're significantly at risk because they could push the price down just artificially just to grab at a low price your Bitcoin, while right after they'll probably push the price up like crazy. So it's encouraging, but it's very risky at the same time. So you have to just play and be safe a bit, I would say.
Perhaps maybe more if your strategy is more accumulation,
Yeah.
versus, leverage, maybe perhaps that's a, a positive sign for you.
And I think so. If you don't want to open a leverage position on Bitcoin and all that stuff, alternatively, well, there's two options. You can open options that are like long enough. That's one way. The other way is to just buy meme coins on the chain, like the biggest meme coins. For example, I'm not sure what it would be on Bitcoin, but if it's on Ethereum, you could buy Pepe, for example. Like that's one of the biggest. I mean, there's other bigger meme coins like Doge on Ethereum, but I think I would go with the meme coin that is new of this cycle. That's probably what I would do. So Pepe could be a good one. This way you don't necessarily maybe need to have leverage because the meme coin would be like kind of a leveraged alternative version of Ethereum, like if it's on Ethereum. So that's one way to do it. If it's on Bitcoin, I think Stacks is recognized as one of such thing that is more volatile than Bitcoin, but is highly correlated to it because that's basically what you want. So if you can avoid using leverage, that's probably beneficial because I think they are playing games and that's very risky that at any point in time they could push the price down here just to go grab that liquidity. So
Meanwhile, everyone's waiting for altcoin season to start. So the question is, what metrics should we be looking at to determine the overall quality of a network?
there's this article that was published by Forbes recently, where they say that there are 20 zombie blockchains, and you'll recognize a lot of them there. Most of the project in the crypto space, it's really sad to say, but there's not that much real users. Most of the users are speculators. We discussed that at many times in the past. Like if you see Ripple, the total network fee in 2023 was just $500,000. So, and how big is their team? It doesn't cover operational cost. It doesn't cover marketing cost. It barely cover anything, to be honest. Meanwhile, they have a $36 billion market cap. And they basically, that means that there's barely any users. Meanwhile, they have a very large treasury. If they manage that treasury well enough and they make maybe, I don't know, 5% per month, or maybe 5% is exaggerated. Maybe they even do just 2%. Most of their revenue probably come from there. So that means that whatever amount of money you spend building technology, if you only have a handful of users and very little revenue coming from it, you should spend as little as possible on building tech. At the end of the day, does it matter that it's tech or it's content or it's a joke or it's a cause? Probably not, as long as you have some storyline that grab attention so that you can build a treasury in the first place. Once you have the treasury, if you manage it properly and you don't let an external market maker or some other entity manage this, and you're the one who capture the revenue from this, you can sustain your price quite a lot for many years. I think like XRP is not like Algorand, $62,000 in 1 year of revenue. That's it doesn't even cover one salary of one developer. So it's saying you need to make sure that you realize that who is your real users. If it's the users of the tech, then it's a complete joke. Like there's almost no project that make money. Meanwhile, if your users are speculators, that mean that, and you accept the fact that your treasury is your source of revenue, that means that your speculators are all customers, because you're building the treasury on top of the speculators. So that means that 100% of your user base are real users, even though they are speculators. So I think that's an eye-opening thing that like people in the crypto space needs to realize, is that this is potentially a significant revenue stream. And I think if you look at Tether, like USDT, they have the biggest treasury of all. They have like $100 billion of treasury to manage, and they manage it with buying T-bills, and they make about 3 billion or so of per quarter of profits on that 100 billion. So they are the most profitable by far in terms of crypto project. And that's because in their case, they don't try to spend money on anything, basically on technology and any of that stuff. They realize that their entire revenue come from the treasury management. So everything that they do is about this.
So it sounds like what you're saying is, if you have, I mean, there's two ways that you can gauge the quality, or I should say the performance of a network. It's either through their treasury or by looking at the amount of revenue that they generate from the network fees. Is that correct?
Yes. And then the thing, like network fees, there's a few projects like Uniswap that do pretty well. Ethereum does quite well, but most projects barely make any money. It's often not even enough to sustain their operational expense. And I think if you accept that your treasury management is where you can make money, and that's at the end of the day, that's the truth, then you should not use external market makers, and you should hire a team to manage that treasury well internally, because that's what most of your revenue can be.
A lot of these networks that I see on the list have a lot of excitement around them, but in terms of development happening on these networks, there's really not much happening, at least not yet. I do think that some of these are working towards having that. For instance, I saw Caspa's on that list. They just introduced their smart contracts, I believe. So those are going to be available pretty soon on Caspa. Now, the question remains whether or not people will be building on Caspa. But perhaps when you look at and you make a comparison between something like Algorand that's been around, and technically you can develop on it, if I'm not mistaken, and Caspa. Caspa is a newer chain, and they're still in this phase where they're onboarding developers.
But the thing, there's a lot of unknown. Like, where did they get those treasury figures? Like, for example, Caspa is NA, but the way I understand Caspa is it's really community oriented. I don't even know if they have a treasury in the first place. The thing, even though some of them may have large treasury, that doesn't mean that they are managing it themselves. In which case, then what is the actual net revenue that is coming back to the protocol? That's unclear. So there's a bit of unknown there. Before we finish, so my bot is on the Ethereum Bitcoin. my return over the past 22 days, 23 days, it's not that great, the match profits. So what I'm thinking right now is that my liquidation price is very low, and I think my range is just a little bit too high because over the past 23 days, there's been only 207 trades that happened. So I think I can optimize this a little bit more. And the other thing is that if you look here on the Ethereum Bitcoin chart, the Bitcoin halving happened here, and now we're post-halving. And if I look at the last halving, which I think it was around the area, the 20th of May. So it was there. So it took a little bit of time, like about 70 days before the Ethereum compared to Bitcoin price started to scale. And it's really about around there, which was almost a year after that it really started to scale like crazy. So right now, we know we have the Ethereum ETF that has been approved and the trading will start relatively soon. So I think it's not a bad time for me to close down my current bot, but re-tighten my range and maybe take some more leverage. Because I think it's a matter of time before we start to scale up quite a bit.
And by scaling up, you're referring to Ethereum gaining on Bitcoin.
Yeah, exactly. So like according to the Super Guppy indicator, we're still in red and there might be a bit more downfall. So I think I'll put my range to be 0.043. And then like it could go up to about as basically twice the current price at 0.08 and a bit more. But this will start to be a danger zone most likely. So what I'll do is I'll probably close down the bot and take less leverage anyway at that point. So I'll just take my upper range at 0.77. And like it looks like I have negative return, but it's not exactly true because I just accumulated more Ethereum and Bitcoin. And I have a little bit less money in terms of USDT, but again, I just have accumulated more basically Ethereum. And I think if I believe that the Ethereum price will grow faster than Bitcoin over the next several months, that means that I have accumulated more money. And I think the matched profit I made about 1% in 23 days. I think that's not great, but at least it's positive. But my funding fee is about half of that. So this is why I think I'm spending too much on funding fee. And because I have too much leverage open and for a range that is just a bit too wide at the moment. And I'll go with a 20x leverage this time because my liquidation price was so low anyway that I feel safe taking a bit more leverage. I think if the price go down, that means my 11K will go down in terms of US currency, but I don't mind too much because I'll just be accumulating more Ethereum anyway. And once the price starts to really kick in, it could happen at any point in time right now because I think as soon as the trading start on the Ethereum, I think we're going to see maybe a God candle, like a really sharp spike up. So I'll go that way. I'll just then send a screenshot as soon as I finish activating the bot.
Great, Patrick.